What's up, guys? Today we're going to do an update on some of the bank stocks that are out there. I own two of them. Ever since the whole banking crisis happened a couple months ago, I bought into Bank of America and I bought into US Bank. Those were two of the stronger banks that I saw that dropped a lot in stock price, and I was like, okay, this is a great opportunity. I know that Bank of America is one of the largest banks, as well as Warren Buffett's second largest position, I believe. So I was pretty confident these were going to come back. They both pay a pretty significant dividend. I believe this one is about 2.7. Well, now it's 2.7, but when I bought it, it was probably 3.5. And then US Bank was like 5.5%, or yeah, 5.5, 6%. So the dividends have been pretty nice the last couple months. But now we're finally starting to see these stocks come back up, and there's several different reasons which we're going to go through in this video. So I got 90 shares of Bank of America. We're up 15%, so finally starting to come back. And then for USB, we are up, let's see, 13%, and I got 85 shares of this one. And again, this one's starting to come back a little bit. So as well as other companies like JP Morgan Chase, that one didn't suffer as much, but that one has also been running up to now $158 a share. And then we have like Wells Fargo has been doing well. So most of the banks are doing pretty good. And if we look at the reasoning for this, we have several different reasons. One being that insiders, and I would think other hedge funds and stuff, have been buying millions of dollars worth of these stocks. So that's not, you don't always need to bet all your money on that, but it is a good sign. Then the other thing is we see that since interest rates are, higher than usual, and they've been increasing earlier this year, that also helped with these banks as far as, net income wise. And it looks like, though, it says the difference between what banks charge on, it says they were suffering from other things, like people have, they're not taking out loans as much anymore and stuff like that. So there is a balance there of people, inflation has come down. People aren't spending enough, or they're not spending as much money as they were previously. So there's different things like that. But the bottom line is people still need to, get a mortgage and get a house, right? So those things are still going to happen, and they're going to be paying higher rates now. Then we have other things. We have Bank of America yesterday says they're going to be raising their dividend, which is always a good sign to see. That's a a positive momentum thing for the stock. So that's nice. And then I believe we have something else. What was the other reason? I think let's see what else. We have their net income went up. The insiders here added $2.4 million worth. So my plan is, like for US Bank, for example, I think this is easily going to get back to $50 a share, right? So I'm probably going to hold it up until that point, right? About $50 a share. If we look at, okay, let's look at that later. Not USB, but Bank of America. The good thing about holding these two is you get that dividend, especially for USB, it's 5 or 6%. Bank of America, this one, I think it's realistic for it to come back up maybe to these levels at about $42 a share or so. But realistically, if it starts moving up and it gets to 35, 37, somewhere around there, then I'm going to start selling some shares. I might sell 10 shares one day, 20 shares the next day, something like that. That's how I like to do it. So that is my plan with these companies. But just wanted to give a little update, a little bit of a review of what's going on. So if you have any questions or you have any ideas for future videos, let me know, and I will get back to you guys later. Thank you.